Imagine a sudden expense that's beyond your monthly budget. How well could you handle it? Life is full of unexpected twists and turns, and financial stability can sometimes hang in the balance. An emergency fund can be the safety net that keeps you afloat in such situations. An emergency fund is money set aside to cover unexpected expenses. This simple definition carries an enormous weight of financial wisdom. It's that crucial financial buffer that stands between you and life's unpredictable twists and turns. Imagine this. You're sailing smoothly on the sea of life, and out of nowhere, a storm hits. It could be anything: an unexpected medical bill, a sudden car repair, or even a job loss. Without a life jacket, you could find yourself drowning in a sea of debt. That life jacket, dear listeners, is your emergency fund. An emergency fund is not just about money, it's about peace of mind. It's about knowing that no matter what life throws at you, you're prepared to handle it. It's the financial equivalent of carrying an umbrella just in case it rains. So, what's the secret to building this life-saving fund? It's simple: regular savings and disciplined spending. Think of it as insurance for your financial well-being. Emergencies can come in many forms: medical expenses, job loss, unexpected home repairs, and more. Life is unpredictable, and these unexpected events can throw a wrench in even the most meticulously crafted budget. Let's delve into a few scenarios. Picture this. You're enjoying a serene Sunday afternoon when you suddenly feel an agonizing toothache. You rush to the dentist only to discover you need immediate dental surgery. Without insurance cover, the cost could run into thousands of dollars. Or imagine you're comfortably settled in your job, and out of the blue, your company downsizes, and you're left without employment. Even with unemployment benefits, it could take months before you land another job. And then there's the home you've lovingly invested in. What happens when the roof starts leaking, or the furnace breaks down in the middle of winter? These repairs can't wait, and they certainly don't come cheap. These scenarios aren't pleasant to think about, but they're a part of life's unpredictable nature. And when they do occur, they can lead to financial strain that can quickly spiral into debt if you're not prepared. This is where a financial safety net comes in, a buffer to help you navigate these financial storms. It's like a parachute that slows down your fall, giving you time to regroup and recover. An emergency fund is this safety net. It is money set aside specifically to cover these unforeseen expenses. This fund ensures that when life throws you a curveball, you can handle it without going into debt or sacrificing your financial goals. It's not about living in fear of what could go wrong, but rather about being prepared for when things do go wrong. It's about ensuring that a temporary setback doesn't turn into a financial catastrophe. So, whether it's a sudden health issue, job loss, or an unexpected home repair, having a financial safety net gives you peace of mind. You know that you have a backup plan, a buffer that can absorb these financial shocks. With an emergency fund, you're prepared to face these challenges without derailing your financial stability. It's not just about weathering the storm, but about sailing through it without capsizing your financial ship. So, how much should be in your emergency fund? Now that's the million-dollar question, isn't it? The answer, as with many things in life, is not completely straightforward. It varies depending on your personal circumstances. However, a general rule of thumb suggested by financial experts is to have between 3 to 6 months' worth of living expenses in your emergency fund. This range is designed to cover the costs of things like rent or mortgage payments, groceries, utility bills, and other basic necessities, should a financial emergency arise. Let's break it down a bit. If you're single, have no dependents, and live a relatively low-cost lifestyle, 3 months of living expenses might be enough for you. On the other hand, if you have a family, a mortgage, and a higher cost of living, saving up 6 months of expenses might be a more prudent approach. But what about those of us who are self-employed or have an irregular income? Well, in this case, you might want to lean towards saving even more. Since your income may fluctuate and be less predictable, having a larger emergency fund can provide an extra layer of financial security. Now let's talk about some factors that can influence how much you should save. Firstly, your job stability. If you're in an industry with high turnover, or if your job is seasonal or contract-based, it might make sense to save more. Secondly, your health situation. If you or a family member have a chronic health condition that requires regular care or medication, a larger emergency fund can help cover these costs if your income were to take a hit. Lastly, consider your insurance coverage. If you have comprehensive health, home, and auto insurance, you might not need as large of an emergency fund since these policies can help cover unexpected costs. However, If your coverage is lacking, a robust emergency fund becomes even more crucial. Remember, these are just guidelines. Your emergency fund should be tailored to your unique situation. It's also not something you need to build overnight. Start small and gradually add to it over time. Even a small emergency fund is better than no emergency fund at all. And let's not forget, the purpose of an emergency fund is not to fund your next vacation or to buy that designer bag you've been eyeing. It's there to provide you with a financial safety net in case of unexpected expenses. The peace of mind that comes from knowing you're prepared for financial emergencies is priceless. So take some time today to assess your financial situation. Consider your living expenses, your income stability, your health situation, and your insurance coverage. Then, start working towards building an emergency fund that suits your needs. Remember, the goal is to give yourself a financial buffer against unexpected expenses. Having an emergency fund is more than just having extra money. It's a ticket to financial freedom, a shield against life's curveballs, the guardian of your peace of mind. It's the parachute that ensures a soft landing when life decides to take an unexpected nosedive. Firstly, an emergency fund helps you avoid the vicious cycle of debt. When unexpected expenses hit, it's easy to reach for that credit card or take out a loan. But this just leads to a mountain of debt that can take years to pay off, with interest piling up and the stress levels rising. An emergency fund, on the other hand, provides a buffer, a cushion that absorbs the shock of financial emergencies without pushing you into the treacherous territory of debt. Secondly, an emergency fund reduces financial stress. It's the reassurance that you have a financial lifeline when things go south. It's the comfort of knowing you're covered, whether your car breaks down, you face unexpected medical bills, or you lose your job. This peace of mind can significantly reduce stress levels, promoting better mental health and overall well-being. Thirdly, an emergency fund prepares you for unexpected situations. The future is unpredictable. You never know when you'll need extra cash for sudden home repairs, unexpected travel, or even opportunities that require immediate funds. With an emergency fund, you can navigate these surprises with ease, turning what could be a crisis into a manageable situation. Moreover, having an emergency fund gives you the freedom to make choices. Whether it's deciding to quit a job you don't love, relocating for a fresh start, or starting a new business venture, an emergency fund gives you the flexibility and confidence to make these life-changing decisions without the fear of financial ruin. In essence, an emergency fund isn't just a financial tool. It's a mental and emotional support system. It's the embodiment of the proverb, "Better safe than sorry." It's a testament to the power of preparedness, the value of foresight, and the importance of financial prudence. An emergency fund isn't just a safety net, it's a peace of mind fund. Take a moment to assess your current emergency fund status. If you find it's not quite up to par, it's never too late to start making adjustments. Remember, you're not alone in this journey towards financial security. Our community is here to help and support each other. If you have any great tips or strategies that worked for you, feel free to share them in the comments. Likewise, if you're struggling or need advice, don't hesitate to ask. We can all learn and grow together. Don't forget to hit the subscribe button and the notification bell to stay updated. Until then, keep saving and stay financially secure. Thank you for watching.